Welcome everybody. Thanks for joining. My name's Darren with Top Key. I'm going to be your host for today. We have a really great guest lined up for you to talk operational versus trust accounting and vacation rental management. So today we're gonna deep dive into the nuances of vacation rental accounting, specifically talking about the differences and best practices with operational versus trust accounting. This is a really, really important topic. As you know, for compliance, for tax purposes, for just running your business overall, and just avoiding errors that could be really, really costly. So whether you're new to vacation rental management or you're seasoned professional on the finance, bookkeeping side or on the ownership side, I think today is going to be really, really valuable in terms of just providing you really actionable insights that are going to make you more profitable, make you operate the business with less risk and more peace of mind, and then just optimize how you're running things overall. So this is a couple quick reminders. This is an interactive session. So if you have any questions, drop those into the Q&A. We'll be going through those. We'll have time at the end of the session to go through any questions that you have, or if it's relevant to the topic, we'll ask those in real time. So just drop those in. I'll see that. I'll be able to ask the questions and make sure we address that. And then, yeah, we love seeing the engagement. So drop those questions in, even if it's unrelated to this topic. We'll try to get to it, or maybe it'll turn into a future webinar. So, yeah, with that, let's meet our guest. So we have Deana Williams here. She is an expert vacation rental management accounting and accounting consultant at VRMadvocate. She's really, really experienced in this space, and she brings a ton of experience helping property managers streamline accounting processes, avoiding common financial pitfalls, and then just overall enhancing operational efficiencies. So, yeah, to kick things off, Deana, would love for you maybe just introduce yourself, share a little bit about your background and the perspective you're going to bring to today's discussion, and then from there we'll dive in.
Sounds great. Thanks, Darren. Thank you to you and Top Key for inviting me. Really excited to be here today, talking about something that may not be the most glamorous part of vacation rental management, but is absolutely essential, and that's operational versus trust accounting. I started working with vacation rental managers by accident. Like we hear a lot of vacation rental managers themselves say when they started with this industry. I was doing operational accounting for a VR management company, and they asked if I would learn their trust accounting. So that request kicked off years of research, trial and error, and then ultimately a deep understanding of what makes vacation rental accounting so unique. So after 6 years of running a vacation rental accounting department, I transitioned to my current role as a vacation rental accounting consultant with VRMadvocate, where I help property managers get their books in order and stay compliant.
Wonderful. I love it. Yeah, really excited to have you on. I think, just having talked with you and we have some clients in common, I know that you're very well regarded in this space. And so I think, yeah, people are going to get a lot out of this. So maybe to just start really high level, what is your perspective on just the differences between operational and trust accounting? What is it? Why is it important? What's kind of the big picture that people should think about? And then we'll get into the nuances.
Yeah, sure. No, really great question and good thing to understand if you're in this space. But as a vacation rental manager, you're responsible for managing other people's units. So, what their rentals and how those get rented, the guests that stay there, you're in charge of that. But you're also responsible for managing other people's money. And so that's where this is a unique space and different from most other or businesses in general, is that you have to keep that separation when you're talking about guest funds as they come in. You're managing those guest funds that still belong to those guests until they stay. And then those funds get distributed out to other stakeholders, tax authorities, the owners, maybe some vendors, and also your management company. And so that would be your trust accounting. The operational accounting is going to be your business's financials. So you want to be able to look at the financials for your management company and see how your company is doing without the excess trust accounting being intertwined in that.
Got it. Okay. Yeah. And that's I think an important point is this is other people's money. And yeah, I mean, maybe talk through just your experience on that, I think it's really important for people to understand the risks here of not handling this right. What's your been your experience, or maybe some things that you've seen on the risk side of it? Like, why is this important for people? Why should they really pay attention?
I think, we, of course, we also saw it in 2020 with COVID when there were mass cancellations that were out of your control and your cancellation policies didn't matter. Guests were being refunded. And so it was, the management company's responsibility to make sure all of those funds were available. And so if you're not working in a trust and operational accounting process in this industry, you run the risk of not being able to distribute those funds that belong to those other people back as they need to be. And that's a big risk. And so some people are like, yeah, well, that was 2020. What's the likelihood of that happening again? Well, unfortunately, I've seen natural disasters happen where things have had to be refunded. I mean, there could be a number of reasons that something happens. And so you want to make sure you're not using those trust account funds to run your business or build a laundry facility or buy a new vehicle for your company. You want to really make sure that you're keeping that separated.
Yeah. Is there, so maybe kind of going from that onto the trust accounting side, what are some of the best practices there? Yeah, we'll start there and then maybe we'll do operational next. But yeah, just best practices, what should be people be thinking about? And I'd be really curious from your perspective on the accounting and bookkeeping side, just really on the ground. Yeah, what should people be thinking about in terms of just best practices?
Yeah, so if we just stick to the trust accounting for now, in my opinion, the trust accounting should be kept completely separate if possible. I do know there are some circumstances that it's not possible. There are a handful of property management softwares that do offer full suite trust accounting. And so if you're fortunate enough to be using one of those, please do all of your trust accounting in that property management software and keep your operational accounting separate. If you have to keep it in the same accounting software, what you want to remember is that your trust accounting are only assets and liabilities. So they would only live on your balance sheet. Everything in your trust account would live on your balance sheet. The money that's coming in, the receivable, the trust bank account itself, those are your assets. And they're offset by the liabilities that are due to your owners, your guests, your tax authorities, and of course to your management company. So you just have assets and liabilities. There would not be any income or expenses in a trust account.
I think that's a really good point. Where do you see people on the trust side? Where do they kind of get that wrong with the assets versus liabilities? Are they categorizing things wrong? Like, where does that sometimes go off the rails?
I think sometimes there's confusion. If you're using your operational software to do your trust accounting because you can't do it in your property management software, there's sometimes confusion when the money comes in from future guests, when you're receiving those advanced deposits. That software, they're set up with so many like automations anymore. That software wants to categorize it to an income account. And so it becomes really easy to let the software kind of do the work for you. And you end up recognizing advanced deposits or those liabilities that are due to other stakeholders. You end up recognizing them as income to your company, accidentally, usually.
Right. So this is someone who's maybe they're using QuickBooks, but they're trying to kind of use the one software for everything. Is that usually the
Everything.
scenario?
Yeah, or maybe they just have one bank account. They've never really separated it, so they just have one bank account. And so again, all of those payments from guests get categorized no matter when the guest is coming. So that's part of it to think about. No matter when their departure or arrival date is, all the payments coming in for future guests end up being recognized at that moment as income. And so then your business ends up paying taxes on that income.
Yeah,
And it's your business
yeah.
income. So that's something just to think about. I don't want to get too deep into that, but it is something to think about. That is actually a liability. It's a payable that you owe someone else.
Right. And I think the tax implications is that's a really important consideration that yeah, what I mean, if someone's doing this wrong, is it a scenario where they're potentially overpaying on taxes, or is it like where does it hurt them potentially if you're the business owner, if you're running the company. Um,
Yeah, they could be, because they're recognizing that income as the payments are happening and not at check in or check out. And then they're likely recognizing the payouts to those stakeholders as expenses, as as they're expending them, not as the net due to them. So um, that's something that it gets kind of deep in the weeds there, but
mhm.
they likely could be overstating their income. And even I've seen instances where it's been significant.
Okay, yeah, and yeah, I think that's something that a lot of people don't realize. They're just like, yeah, I'll figure it out later. I think
Right.
everyone's very entrepreneurial in this space, and so I think there's a sense of like, oh, I'll just figure it out later and deal with this. But this is an area where, like, yeah, maybe if you get guest communications wrong, you can deal with that. You can figure that out. But this is something where if you get this wrong, you now owe the government more money than maybe you expected, and that's we're
Potentially, yeah.
yeah, potentially. I have a question from the audience here, and quick reminder, everyone, send it Q&A. We'll try to get to all of these that we can, and if we don't, I'll send out more info afterwards. But question from Dan, is there a legal obligation to use trust accounting?
And that's a really great question. I have a couple different answers. I'm going to give you uh, per state. Sometimes it's within the state. There's local regulations, but there are legal regulations in a few states, and some are, definitely more strict than others. However, I see it coming to where you're going to see more and more states adopt some of these regulations. Um, and I'm going to go with like in my legal morally, am I handling this right? So I say across the board, sure, if you're audited, if the real estate commission comes in, I mean, there's a lot of stuff that people don't talk about. So they'll be like, this, we all know, we hear about famous North Carolina and their regulations constantly. But then every once in a while, there's a state that's more lenient that, somebody comes in and they get audited and all of a sudden they still have some ramifications from it that aren't necessarily advertised or talked about much. So, I do feel like for moral reasons and then just to be on the up and up for that audit, if it ever happens, um, it's probably a good idea just to follow best practices.
Yeah, and I think that's a good point too, is that okay, maybe the laws haven't caught up or they're not the same in every state, and we see that everyone's dealing with something different, but eventually they probably will, but even then it's still you're probably going to be in a good spot if you're doing things the right way.
Yep.
And you don't have to worry about everything collapsing just because some new bill was passed in your state.
Just
And
be ready for it.
yeah, exactly. Another question here from Gonzalo. Can you have the trust funds on an interest-bearing account? Do you have to share those returns with property owners?
Also, state by state regulated. There are some states that do not allow a property management company or short-term vacation rental company to collect interest on their trust account. There's some that say you have to share it with your stakeholders, so your owners. And then there's some that have no regulations around that at all. If you are in one of those states, I very much recommend having your trust funds in an interest-bearing account. 100%.
Yeah, absolutely. Yeah, it can be a very obvious way to kind of help cash flow on the business side. And then another question, I'm just going to do these audience questions as they come in while they're relevant because this ties into, I think, moving into the operational accounting side of it. So another person asked, my PMS prepares P&L, including things like rent, commissions, property management services, everything they're billing the owner. What do you think of that approach? So I think that actually probably ties into the operational side. So yeah, how should people think about operational accounting? How do you do it for clients? Yeah, I would love to hear your thoughts there.
Yeah, let's dig into that. Your operational accounting, your profit and loss for your business needs to be a tool for you to grow your business. And so you want it to contain only your business income and your business expenses. Um, when you remove that liability of what's due to the management company, At the end of each month, after all of those people or guests have checked out for that particular month, and you move that over to your operational side, you want to record your income as it was earned. I earned exactly this much in management commission. I earned exactly this much in cleaning fees, all of those ancillary fees from your reservations. You want to break those down. And then you can start using that financial statement to grow just your company. It doesn't include any of your property income, the property related expenses, unless it's a reimbursable that has an offset. So you want really to be able to use that profit and loss as a tool to grow your company. And you can't do that if it's got commingled information in it.
Right. Yeah. How are you typically, maybe for your clients, or how do you recommend that they handle the operational side of it? I know the trust accounting, it's often the PMS, but yeah, what do you tell people whenever they ask you about that with your clients?
Yeah, so if you run through like a month end process, I'm going to pay out my management company just like I pay out an owner in the same way. That moves the money from the trust account to my operating account. And then I'm going to categorize that deposit as it was earned for the month in the month it was earned for. So if I just closed February, I want a February deposit or a receivable, either one, that breaks down that income as that I've earned as a management company. And so my profit and loss will have income accounts that align with what I've set up in my property management software, and I'm going to record it as such. And then I want my cost of goods sold to be any expenses that offset those ancillary fees. The obvious example of that is I have cleaning income. I want a cost of goods sold that lists my cleaning expense. So I can very easily at a glance tell if I have a margin for cleaning or if I'm losing money in cleaning. And so that you can make good business decisions. You know, did my housekeeping rates go up? Do I need to raise some prices? Am I being charged for something that didn't happen? And so real quick, 5 seconds, I can see that on my profit and loss. Then your operational expenses, so your payroll, your insurance, um, those types of office expenses, office rent, those are all your regular expenses for your company. And so those would be expenses on your profit and loss.
Got it. What are some of the challenges on the operational side with either recognizing income or allocating expenses to the right categories?
Yeah, you want to be consistent. And so, you know, making sure that you consistently are dating your disbursements the same every month. So if you wanted the last day of the month, you want to be consistent with that. You also want to make sure that you're not allowing that software to completely automate everything. They're trying to be super helpful. That software is set up to make it as simple as possible. And they're telling us you don't even need an accountant. Just go in there and hit add, 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 add. And then they categorize things however they want. Well, in order for you to make smart business decisions, just make sure that they're choosing the correct categories and they haven't made a mistake. And they do commonly make mistakes, the software, until they really start learning your patterns, or if you set up rules to keep that from happening.
Right, right. And kind of, so you were talking about, references to the chart of accounts a little bit, with cost of it, just all the different categories that you might put something in. What are some best practices as a property manager that you should think about with chart of accounts? We see a lot of this, so TopKey, we integrate with their accounting software, and so we're pulling in charts of accounts, and people often will come to us with questions around how should this be? They're like, well, we have it set up a certain way. Don't know if it's good or not. Yeah, what are some best practices there around chart of accounts?
Yeah, so I did kind of touch on that just a little bit before, where you want your income accounts that align with how you have your fees set up in your property management software. Then you want your cost of goods sold section, and I'm going to go backwards to the uh, balance sheet in just a minute. But because I like to focus on using that profit and loss as a tool, I'm going to start there. So your cost of goods sold section would be next, and those are any type of expenses that offset those ancillary fees. So I mentioned the cleaning. Another one might be you have a processing fee income account. Your merchant fees would be a cost of goods sold because you want to make sure you're covering those merchant fees, that type of thing. Then you have your operational expenses, and so those would be listed next. I always recommend using numerical system if you can. And there is a rhyme and reason to the numerical system. And so if you want that information, feel free to email me and I can share it with you, or Google it. It's pretty simple. On the balance sheet side, of course, you have your assets, liabilities, and equity, but what exactly does that mean? So your assets, bank accounts, fixed assets, receivables, those types of things. So if your business has purchased vehicles, you're going to have a fixed asset. If they've purchased the office building, they're going to have, that's an asset. And then your liabilities are, what you owe other people. So again, this is where we get into, do you record your trust liabilities in your operating account? That's where they're going to live because those funds are owed to other people. And then any other type of loans, mortgages. So if your office building has a mortgage on it, that type of liability, credit cards. So if you have Top Key, that's where the Top Key credit card liability will live. And then the equity section is, how much money your company has made, how much you've paid out to yourself as an owner. Those types of equity accounts are pretty normal too.
Got it. What are some of the whenever maybe someone on the ownership side is looking at all of this balance sheet, income statement, what should they be looking at to really think about whether they're effective or not, whether they're growing or not, whether they're doing things the right way or not?
Yeah. I often, the pain point I hear the most from owners of management companies is that their financial statements don't make sense. I hear it over and over and over again. That typically means to me that most deposits are being routed to one account, most expenses are being routed to another account, or maybe a combination of a few accounts, but it isn't accurate and it doesn't make best practice industry sense. And so, setting yourself up for success by creating that, and then that owner should be able to, at a glance, be able to see, do I have any negative balances, which you shouldn't, other than depreciation or some equity accounts. So that would indicate something was miscategorized. Negative balances. Of course, is there a net profit? I do want to look at a quick glance at my income and my cost of goods sold to see if I'm losing any money. I typically see some losses around cleaning and owner reimbursables. So just as an FYI for those of you out there, for some reason, we're not always capturing all of that. And in my opinion, there should be margins on all other ancillary fees. So you want to have a markup of some sort on every ancillary fee, and so that you're making some money on those as well as your commission to your owners.
That's a really good point. Do you have common markups that you're adding, or just common margins that you're looking at to know if someone's in uh, kind of within range of what's maybe normal or benchmarks?
I wouldn't I think it's going to be unique per company,
Hmm.
and a lot of it has to do with what are their operational expenses. So what are they having to cover so that they're making money at the end of the year? Do they have high payroll? Well, then you're going to have higher margins. And so, if they're in an area of the country, resort community, that their office rent is really high, they have to have higher margins. And so really the owner of the company wants to look at it and decide, what do I want those margins to be? And then use that as a KPI going forward to ensure that those stay what you want or need, or make changes so that you get there.
Right, right. Yeah. And then uh, that requires you to do things consistently, because otherwise you're not measuring anything really. You're just kind of
Correct.
throwing things against the wall. And you mentioned owner reimbursables and things like that. We deal quite a bit with that on the expense side, just because that's what our platform deals with. Is there, what are some of the common themes that you see around, like, why are they missing cleaning or owner reimbursables? Do you have a sense of why this is happening or how they might fix it?
Yeah. So expense management has been a game changer in general. Companies who are not using an expense management platform are really trying to capture all of those owner reimbursables manually. So did they receive all the receipts? Are they going line by line through their credit card statement and going, wait, did I need to charge this to an owner? Or did this not get charged to an owner? You know, if they're not using a work order system, then some things they just get missed. And so using, you know, an expense management, using Top Key so that the purchasers are accountable for their receipts, for the memo, for choosing the properties, that has changed my answer to this significantly than what it was a few years ago. Because it was constant, you know, we were constantly chasing receipts and trying to understand what to bill owners and what we were billing them for. You know, I can see a Home Depot charge on a credit card statement. What unit to charge? No idea. Um, and so, you know, if you are outsourcing your bookkeeping and your bookkeepers are looking at a credit card statement to charge back those owner reimbursables, you're missing a lot. I promise.
Yeah, we see a lot, we call it leakage, and we see a lot of
It
that,
is.
where, let's say it's a $10 charge. Is it even worth spending 30 minutes to an hour to track that down? Probably not. And then that adds up over all your properties. And so, yeah, you end up, it adds up very quickly in a way that I think gets pushed under the rug for people. Um, and yeah,
No.
we have a bit more time here, maybe 5, 10 more minutes. We've got some questions coming in. So if anyone in the audience does have more questions, we'll try to get to those. One that ties into this exact topic, so I wanted to ask it now. If we pay expenses on behalf of owners, which are billed back to owners each month, what should be the correct bookkeeping for those?
Yeah, so you're going to have an owner reimbursable income account. Try to keep this simple. This can get a little complicated or maybe cluttered, I will say, on your P&L if you're not careful, because people end up wanting to separate out those reimbursables by type. For instance, they might have owner reimbursable landscaping, owner reimbursable pool cleaning, owner reimbursable repairs. You know, so they end up having, you know, several owner reimbursable income accounts that are offset by the same cost of goods sold owner reimbursable expense accounts. Makes it harder to check one by one if you're losing or have any leakage, as you put it, if it's not simple. And so the more owner reimbursable income accounts and cost of goods sold accounts you have, the harder it is at a glance to make sure you're not, you know, you don't have that leakage that you were talking about. But that's absolutely normal. Um, if you're using a tool like TopKey, then you should hopefully be able to integrate directly to the owner statement. And so that you're ensuring that you're capturing that uh, with that sync. And so and sometimes you have to manually, some of the property management softwares don't have that open API and you still have to manually post some things. But as long as that's happening, you should be capturing it. Still, there should be some kind of markup. I'll say this until I'm blue in the face. You want to make sure you're marking that up some because your team is taking time to organize whatever you're doing, get somebody out there, your payroll, you know, you have all of these things that you want to make sure you're covering so that your company isn't losing money.
Absolutely. And that kind of leads to another point, that I've heard you talk about before, is just efficiencies. I mean, what are some things that you do with your team, or that you recommend for maybe some of your clients on how do you make this easier, more streamlined, more efficient? We're dealing with an industry that an owner statement is just kind of like a small P&L for someone. And so you've got people who've got 100 properties, you've got your P&L, and that's a whole team at another company that's doing this. But now you've got all these other owner statements, these other financial statements that you've got to produce for people. And so the complexity just scales. So yeah, how do you keep things efficient? How do you think about it from a software, from a team perspective? Yeah, would love to hear your tips and tricks, because I know you're really good at this.
Yeah, and thank you. That was a nice compliment. I do think about this. I think about different types of people. And when I used to, I'm remote now, so I'm working from home. I don't have to do this anymore. But when I used to drive to work, I was never a person that took the same route every single day. I wanted to find the route that was either the fastest, I enjoyed more, had maybe I used public transportation because I was able to listen to podcasts. All of those things happened constantly. And so the same thing is with accounting. Like I did not start working in accounting and do everything the same way to get where I am now. Every single time I start a task or I work on something, I'm questioning, is there a better way? Is is there a way that's more enjoyable? Let's face it, accounting can be super boring. And so I wanted to find a way that I enjoy doing it more. I want to find a way that's super efficient, that's very accurate. And we don't want to be doing anything that's going to get us numbers that are wrong or incorrect financials. And so as I've done that, I have picked up on efficiencies. I do enjoy using technology. And so I think that that helps. There are a lot of really great tools out there that help make things more efficient. Owner reimbursables, posting owner reimbursables to owner statements and any property management software is a cumbersome project. And now we have tools like TopKey that make this much easier and more enjoyable, in my opinion. Like I enjoy using those tools. And so probably more than half of my time I gained back by having tools like that to make things more efficient. I have dogged on QuickBooks today and their automation. However, if it's set up right, super great tool. Having that ability to automatically pull in your bank feeds and then set up rules so that things get categorized automatically and I don't have to spend time researching those things. Super efficient. I love that when I'm reconciling in QuickBooks, every transaction that I brought in through the bank feeds is going to automatically be reconciled. If you're doing things right in QuickBooks, the reconciliation will take 10 seconds, literal. Reconciling your trust account and your property management software. I learned a long time ago, I don't want to look at the PDF statement anymore. I want to download those transactions to an Excel document so that I can sort them in the same order they're in my property management software. And I'm just clicking through one for one. So all of those things have made everything more efficient for me and the teams I've worked with.
Yeah, that's something that we see a lot where it's almost kind of like a warning sign that this is an area that you could probably get a lot more efficient in if you're doing something out of a PDF and you're copying and pasting that, or you're logging into 10 different credit cards and banks. It's probably a much easier way to do that. So yeah, maybe we've got about 5 minutes left here. So any last questions that people have? Would love to maybe get your take on just the software in general out there, pros and cons of some, and maybe if you want to shout out some, great. If not, totally fine. But we have a couple people that were asking about just software that you recommend. It's always a very common question. Yeah, both the operational, the trust accounting side, just other financial operations tools. Would love to just hear your take on software, or even not necessarily specific to that, but like AI. I know that's always a big topic for people. But yeah, what kind of softwares do you think about, pros, cons, and maybe ones that you use?
I actually am a big fan of QuickBooks Online. So there's a lot of operational accounting softwares out there. QuickBooks Online will probably be my favorite until another one comes around that has better AI. So you said it. I do like AI. It has helped with bookkeeping in general, and I think it will continue to get better. And so operational accounting, there are other solutions out there and other great solutions out there. That's my personal favorite for QuickBooks Online. I don't want to get into too much of the nitty gritty with the property management softwares, but there are a small handful of really great options that do offer trust accounting. And if you come work with me and my consulting team on trust accounting, I'm probably going to point you in the direction of one of those. They're not all made the same, and I do have my favorites. And maybe one-on-one, I can have those conversations with people. I don't want to get into too much trouble. There's a couple expense management platforms. I love TopKey. I think TopKey is a great solution for expense management. So I'll put that out there for sure. And Guy, in the accounting world, it makes it hard because I do see so many the tech stack is big. We can get into like security. I'm a big Keeper. I don't know if anybody out there uses Keeper. I love Keeper for my password management. I feel like the clients that I work with, their information is more secure. We work with a lot of very secure information in accounting. You want to make sure it stays that way. And so I'm big on password management, and Keeper is my go-to. Other people like LastPass, or I've seen people use other options. Keeping things in an Excel document or written down on your notepad on your desk kind of gives me a little anxiety. Uh, so those types of things that, the tech stack just gets big. I probably could talk about a lot more even.
Yeah, yeah, absolutely. Yeah, I know we could do a whole session on
Yeah.
the tech stack. Well, great. Yeah, we had a few other questions that came in as well. So I think they're kind of similar to ones that we had talked through a lot on owner statements. I think maybe, one question, because I know we don't want to necessarily, and it's always different for every company, but on the PMS side, maybe what are a couple questions that people should be asking when they're evaluating which PMS is right for them or which accounting software or anything? Because, I think to some extent it does really depend on what you need. So yeah, what are maybe a couple questions someone might think about as they're evaluating these softwares?
Yeah, the number one question for me when I'm looking at a software is, can I reconcile the trust bank account in the software? There are instances where PMS will say they have trust accounting, but you can't actually reconcile that bank account, and it is important. So you want to make sure that you are actually receiving all of the payments that are posted to reservations, and the only way to do that is to be able to reconcile that in that software itself. And so that's the number one question I'm asking. But then I want to know, like, what do disbursements look like? Disbursements to the owners. So what does their owner statement process look like? And those disbursements, I want to see the details on an owner statement. How are the funds flowing from reservations to the owner statements? How are owner reimbursables flowing? So I want to see both of those things. I want to see the disbursement to tax authorities. Specifically, what do the reports look like? Sometimes the tax disbursement reports cause a lot of extra work depending on where you're at and what your tax authority requires when you're filing. So I want to see that tax disbursement in the reports. What is the process for getting the information you need to file? And then that manager disbursement. So those things are very telling when you look at them and you're shopping for a PMS.
Got it. Okay, great. That's really helpful, and I know just giving people the right questions to ask is sometimes half the battle here. Well, hey, Deana, thank you so much for joining. Yeah, that wraps up. I know there are questions from the audience that we weren't able to get to. I'll send this recording out, so if you or someone on your team wasn't able to get to it, and then Deana, if people have more questions, where can they reach you? Who should reach out? Yeah, where can people find you?
Yeah, so please feel free, anyone, to email me, even if you just have a question. I'm happy to get back to you with a quick answer. My email address is Deana, Deana, at VRMadvocate.com. And I probably could put that in the chat, I'm guessing. And then our website is www.vrmadvocate.com.
All right, wonderful. Yeah, and I'll follow up with people with your info if anyone wants
Okay,
to
great.
reach out. Yeah, she's highly recommended in this space. So yeah, Deana, thank you so much for joining. And then for anyone else interested, if you're not already on TopKey, we're helping automate a ton of financial work and bookkeeping and expense work. And yeah, it's just helps elevate teams so that way you can focus on more strategic work than, going into a PDF and copy and pasting and chasing down receipts. So, yeah, if you want to learn more, visit topkey.io/customers. You can see what our customers say about us. But again, Deana, thank you so much. For everyone in the audience, thank you so much for watching. And yeah, we really appreciate it and look forward to seeing everyone next time.
Thank you, Darren. I enjoyed being here.
Thank you.